Sure. He also seems to be, in my opinion, backing away a little bit from what his original strategy was and moving more towards the Warner Brothers Discovery type model in terms of licensing content, being willing to license content, not holding all of the content back for Disney+. I think that's best evidenced in Avatar 2, which we're seeing. And this may be part of an original agreement with James Cameron, the director of the film, but it would appear that they are going through traditional licensing windows for Avatar 2. There's no rush to get that to Disney Plus in the same way there was with Black Widow a couple of years ago.
What does that mean in terms of how Iger is thinking about at Disney the push toward profitability for the streaming service, and how that speaks to the broader landscape where everybody is trying to tighten belts and trying to find a way to make money on these platforms?
Look, I think the biggest opportunity for Bob and for Disney is to sell their stake in Hulu. I know that there's been a lot of debate and disagreement over what is the right strategy, but I think that would deliver a significant return on investment to the shareholders. I think they've already got an asset that is the equal of Hulu, if not significantly better in Disney Plus, keeping in mind that Disney Plus is essentially a worldwide service, whereas Hulu is only in the US and Japan. So I think there's tremendous opportunity to back out of that service, for the service still to remain successful, and for them to look at other assets, such as the transaction that happened today with Endeavor and WWE. WWE, I think, would have been a tremendous asset for Disney.
Yeah, I want to get into that deal, too. But first, just another question on Disney specifically. Comcast is the other stakeholder in Hulu, our parent company, CNBC's parent company. Do you think Comcast actually wants to buy Hulu? Is that a deal that you think actually gets done?
I'm not sure if it'll get done. Obviously, there's an agreed price that the transaction could take place at. There is a schedule that it is on. So I think that it's going to be something that heats up over the course of this year. It has to take place by the start of the early stages of 2024. So I think there is going to be a deal done one way or the other. And as I say, I think that that's a better way for Disney to go. And I think it gives Comcast a tremendous asset to align with Peacock. And I think that service could continue to be very successful. But I think at the moment, Disney already has an asset very similar to Hulu in Disney Plus. And I think they should focus on that asset.
So I do want to talk about the deal of the day, and that is Endeavor buying WWE to then merge it with UFC as a standalone business. We have some sound from Vince McMahon of WWE and Ari Emanuel of Endeavor, who sat down with CNBC over the weekend. I just want to play that for you.
The number one show in cable is Raw, 1.8 million viewers, up 9% from the same period of time, 2022 to 2023. Even though everybody says cable's dying, Raw is up. SmackDown, I think it's 2.3 million viewers, up 7%, same period.
The idea here is there's nothing like the two combined. It's live. That's really a key, is our events are live. People want to watch live.
What's amazing is that both of these stocks actually ended the day lower, but we keep having this conversation about how crucial sports is in terms of a profit and money-making machine, especially when it comes to live events.
Look, I think the market's misreading this. I think this is an amazing deal. I think it was very cleverly structured. I worked for IMG, which is an Endeavor parent, which is a division of Endeavor. I worked for IMG selling media rights, sports media rights for 6 years. And I think people don't really appreciate how much more valuable WWE is when it's being managed by Endeavor. Certainly Endeavor represented the brand for 20 years as an external client, but I think now that it's in-house, Endeavor has a number of clients around the world, and they can draw on all of the intelligence, all of the learnings that they have from clients such as Wimbledon, such as the Olympic archives, to drive significant additional value in WWE. So I think for shareholders of both companies, I think this is a very important day. And it also structures the new company as a big global media company rather than an agency business. They've gone from just owning UFC and professional bull riding to now owning these two assets alongside each other. So I think it's very exciting, and I think there's a very strong path forward for the combined companies.
Always great to get your thoughts, Simon Gallagher, especially on a day like today. Appreciate it.